All right, guys, Michael here. Just wanted to shoot this quick video for you, record this video, and I wanted to share something with you that's got me very excited. Um, my eyes have been opened, and I think after I show this to you, your eyes are going to be open too, and we are all going to become much, much better traders. Uh, Let me show you what I'm talking about. I'm going to share my screen, and I just want you guys to realize, want you guys to see how fortunate we are to be in the position we're in right now. We all know how much we've learned from Cordell with the RSI2 and 7X, everything, and it's been amazing and will continue to be amazing. And I can't even comprehend how far I've come in the last however many months I've been in this, 4, 5, 6 months. I don't even know now. But everything that has happened with us so far, I think, has been for a purpose, has been for a reason. I know we had kind of a crazy time with this whole market maker strategy thing, but I am so glad that that has happened. And let me show you why. Actually, let me share with you several things. Everything that has happened up till now, I believe, has been part of the plan. So let me just share my screen and I'll show you what I'm talking about. Let me get rid of this. Okay, so I was watching a video today by Michael Angel Martin. This is a snapshot from his video. And what he was doing, he was talking about the correlation between a strategy of his called the Guppy strategy and then Eric Garrison's bounce back strategy, and how they're virtually the same thing. So the Guppy strategy, I don't know if you've heard about it or know anything about it, and honestly I don't know exactly why it's called the Guppy strategy. I think it has something to do with specific indicators. I'm not really sure. Excuse me. And so the Guppy strategy is this. So when you see price moving in an obvious direction, you draw a trend line. Okay, we all know what trend lines are. Whoops, let me get going here. You draw a trend line. So here's a trend line, and when price breaks the trend line, here, let me move this a little bit more. So here's our trend line, kind of doing this thing here. Okay, so we're following the trend of the price. And when price breaks the trend line, this is the Guppy strategy, price breaks through the trend line, retests, then it typically starts going the other way. So there you go. So there would have been a few pips there. Then as price is moving down another way, we see another trend going, so we draw another trend line. Okay, so, and I'm just doing this fast. I'm not trying to be terribly precise, just to give you the visual. So we see the trend line. Once the trend line is broken, comes back and retests, then it takes off. There's some more pips for you. Okay, so then we draw this other trend line. We see it going up through there. We draw a trend line, and then when price breaks the trend line, here we go. This one did not retest. It just kept on going. So with the trend line, with the Guppy strategy, they may or may not have taken this one. Could have if they wanted to. So we could draw another trend line. Let me start up here, just for the heck of it. So there's a trend line for the down move. Broke through, kind of retested here. Boom, there it goes. That's a big one. That's a good one. We got another trend line going up. Okay, I think we're starting to get the idea of how the Guppy strategy works. Got the trend line, breaks the trend line. Here we go. All right, and you can do this all day long. You can follow this. So it's a good strategy. It works really well. The hard part is knowing when to get out of the movement. So anyway, so that's kind of well, what the heck? We got one more. Whoops, we need to move that. We got another trend line. Hello, come on. There we go. Got another trend line there. And then it broke through. It may retest and keep on going. So anyway, that's how the guppy strategy would work. Now let me get rid of these. Okay. The bounce back strategy, so he kind of does a very similar thing. Okay. Bounce back strategy uses an indicator called SARS, which are these, you see these little green dots, which show you the direction of the movement. And when momentum changes, when momentum shifts, and basically once it breaks the trend line, let me draw this just for the heck of it. I'm going to draw this trend line again. When price breaks the trend line and it's going to keep on going, then the SAR appears, the little dot appears above the candle where the momentum has shifted. Okay? I don't know if you can see that, but there's a little green dot right there, right above this candle. So the way the bounce back strategy would work is once you get that flip on the SAR, then you would check the time frame lower, and if the trend is moving in the same direction on the lower time frame, then you just go ahead and get in the trade, and then you put your stop loss above the SAR, above the dot. Okay, and as price moves down and the dots show up at each candle, you keep moving your stop loss just above each SAR dot. Okay, and that's the bounce back strategy. It's pretty simple. It has several indicators just to help confirm everything. So that's how the bounce back strategy works, and it works very, very well. And it's the hottest thing right now. People are making pips when they never have been able to before. So the bounce back strategy is a good one too. Okay, let me take that off. So basically, you know, once that trend line is broken, let me get rid of that. Once that trend line is broken, that's when the SAR flips. Okay, that's when the dot shows up. Now, so I was watching this video as he was explaining how they really are essentially the same type of a strategy. Okay, nothing major. Guys, do you see something else? Okay, we see our channel. So Cordell has taught us all about channel lines. Let me draw a channel line here. So we've got our touches there. Boom, boom, boom. Okay. And the other trend line right here. Okay, so we got our hit there, there. And then price went a little funky. Let me make sure I've got this kind of straight here. Where is it? Oh, right there. So something about like that would be our channel. Okay, probably right there. So then you have that hit there, hit there, hit there. So there is our channel, and we all know about trading the channels. Now here's what has happened to me several times. Probably has happened to you too, where price was coming up. We know we've got a pretty good channel. It's coming up close to our channel line, and it hits the channel line, so we get in for a sell. RSI is up there too, so we've got our confirmation on the RSI, and we get in for a sell, and boom, it shoots up through our channel, breaks our channel, hits our stop out, and we're stopped out of the game here. And then what happens? It comes back into the channel, and we're kicking ourselves because we missed this whole long move because we got stopped out up here and we didn't get back in, because what we thought was going to happen was price broke through the channel, come back and retest, and you see that it did, retested right on it. Candle closed right there. So the natural thought would be now it's going to bounce and continue higher. But it came back down and we missed this drop, and we're kicking ourselves and we're all upset. Okay, I know that's happened to me several times. It's probably happened to you too. But so we know our channel lines, okay? And then it held here, came back down, but closed above the channel line. Now we've got our move back up, okay? All right, guys. Let me show you the third aspect of this. All right, let me get rid of this and this. What else do you see? Let me show you what I hope you're seeing. Right there. Let me slide this over. Let me get this a little smaller here. Bring it in. Slide that over. A little bit more. There we go. Okay. I put these side by side. This right here, guys, is a typical week for the market maker strategy. This is the pattern for the market maker strategy. You will see, and this is over the course of a whole week, that you will see this pattern over and over and over again with slight variations here and there. Might be inverted, but it'll be the same type of a pattern, just inverted. You see this pattern also pretty much every day. So each day, this same pattern occurs. The pattern is it comes out of consolidation. Okay, so this would be Friday going into Sunday. You can see it right there, Sunday. Friday going into Sunday. We come out of consolidation. We get a little bit of a blip, a little stop hunt right there to knock out some stops, and down we go. Hey, we're in for a sell. All right. Then we got a little pullback. We're probably going lower. Now we're in consolidation, but it'll take off and go lower. Boom, here we go. But real fast we pull back and we knock out the stops. The market makers knock out the stops there. Then we have a 3-level push. 1, stop out, or pull back. 2, pull back, little consolidation. 3, big push. So 1, 2, 3. Sometimes, okay, here's your midweek reversal. Sometimes, oh, and I might say, you know how Cordell talks about turnaround Tuesday? Okay, we've been going down, down, down. Tuesday hits and goes in the other direction. So there's your turnaround Tuesday. 1, 2, 3, midweek reversal. Sometimes this happens with 1 push, and then it takes off and comes down. Sometimes it's 2. Come back, let's get them again, see if we can stop out, everybody. Sometimes there's even a third stop hunt. But hardly ever, if ever, there is more than 3. And then down we go for another 3-level push. 1, 2, 3, into consolidation. All right. Maybe one more little dip, and then we're back up. You know, we'll get a little stop hunts going on here to try to clear a few contracts out, knock some people out, and then we're back into the week, another consolidation mode. Now watch. So here we're coming out of consolidation, or here, this movement right here came up in the consolidation. So here we are. We'll stop hunt, boom, we'll stop hunt, and down we go, over here. And then we got some consolidation. We got a little up and down motion here. Another big push down, Here we go for 3 levels. You know, here you had the 1, 2, 3 push. Over here we've got 1, pull back, 2, pull back, 3. Midweek reversal. Here is where it does it in 1 push. Instead of 2, this one does it in 1. Okay, now I'm going to bring this over because this hasn't continued yet with everything else. This is the midweek. Let me blow it back up here. Here's your railroad tracks that Steve talks about in the market maker strategy. Up, down. Where would you get in for this move, you would get in right here. Okay? So they got the up move, got the parabolic move up, stop hunt, come back down. You get in as soon as this candle closes. And yeah, there might be another push, but it's not going to get, shouldn't get to your stop loss. And he tells you where to put the stop loss on the market maker. And then down we go for 3 levels. 1, there's your first level. There should be another one coming and another one coming. So we're looking at a good long down push. Just as the bounce back strategy would be looking for a good long push. All right. Now you remember we had our channel lines drawn up here and it pushed through. Now, guys, next time this happens, watch for this pattern. 1, 2, 3. Watch for the stop hunt. Probably going to happen. It may come out of our channel line. It may come right back into the channel line. It may do it a couple times. It's eventually going to come down again, more than likely. Obviously, no guarantees. But now, guys, do you see how with our eyes wide open for all of these strategies, how it all works together? I'm not going to be scared if it pushes up. If I've seen this pattern, now I can play off of the hits of the channel lines, okay? And this isn't going to scare me anymore because I'm expecting it. I'm expecting it to push through and come back down. I don't really have to worry if it's going to come down, retest. It might bounce there a few times, couple times, but it's probably going to come back down. So you just kind of have to know where you are in your channels and what's going on with this pattern. Guys, I think now our trading is going to improve dramatically. Do you see this, guys? Do you see what's going on? Now that we have seen how the patterns work, and again, there'll be variations. So when there are variations, we're using our channel lines to guide us. I'm stoked, guys. Now we can see the big picture. We just have to keep track of where we are in this cycle. Okay, in this whole cycle coming down. So anyway, I hope that all made sense. I hope you can see what I'm talking about. But as soon as Michael put this screen up, this pattern up on his screen in the video, I went, holy cow. That is the market maker pattern. Here is our channel. We know what we're doing. We can trade these trends as they come back using the guppy strategy. We can get in instead of, now see, here's another thing. With the bounce back strategy, you would not have gotten in until somewhere in this candle because that's where the SAR flipped. So all the bounce back people, and the bounce back strategy is hot, and man, it's good. It works. And Michael Martin has created a manager, a bounce back manager, that once you see price getting up into the Bollinger Bands or whatever, you can throw that manager on there, and it will automatically, whenever that SAR flips, it'll automatically get you in the trade, and then it's going to trail you all the way down. So the bounce back strategy is really hot, and everybody's excited about it. But even with the bounce back strategy, Eric, an 8-figure earner who does this, is getting in right around in here. Guys, we have an edge. We can get some more pips out of this because we know this pattern, and we know trend lines, and we know that price respects the trend lines, our channel lines, as well as those trend lines from like the guppy strategy. There is so many pips in here, fellas, that we can trade. Fellas and fellettes. So many Good grief, the amount of pips we can get out of one move on one pair. Do you see that? And that's not even layering in. You can trade 2 or 3 strategies all in one if you wanted to. But do you see what I'm saying? Man, I'm excited. So anyway, I'm going to stop. I'm going to get this to you guys. I'm going to stop sharing my big old face out of the way here. I'm going to stop recording. Love you guys. I hope this helps. I hope this has opened some eyes. So anyway, I'll talk to you soon.